With the higher interest rates that we are now seeing, is now a good time to buy a home here in Rochester, Minnesota, or should you wait? Today we're going to take a look at what are some of the potential outcomes if you buy a house now or if you wait, and we're going to take a look at what would happen if interest rates would go up or if they go down, and kind of have a conversation around that. With me today I have Ryan Manley from Guarantee Rates, and he's going to walk us through this. Ryan, how's it going?
Joe, I am doing excellent. How are you doing today?
Good, good. Let's take a look at some interest rates here and go through this example.
Absolutely. So here we've got an example of a listing of property sold here a couple months back. But we're just going to take this as an example of, really question we get is, should you buy now or wait with the interest rates? So if we go to the next slide, we know three things can go on with interest rates. We know that rates can stay steady, rates can go up, or rates can go down. One thing we've learned this year is it's tough to forecast what rates are going to do. So with this example, we just want to illustrate what will go on with all three options. So are we ready to go through this, Joe?
Let's do it. Yeah.
Excellent. So in the first column, we've got the current rates, and we've got our purchase price, which is $585. We're going to assume in this case 20% down, which would be a loan amount of $468,000. And then your down payment would be $117,000, and monthly payment would be $3,312.
And that payment would be your principal and interest, right? That wouldn't include taxes or insurance, right?
Correct. Just to simplify this example, we're just going to use principal and interest. Typically on top of that, you would have your tax insurance, which we can estimate in there. But for today, we're just going to go with principal and interest.
Okay.
So we know three things can go on with the rates. So let's take a look at if interest rates were to go down 1%. So I know a lot of people are kind of sitting on the sideline right now saying, well, let's wait till next year and hopefully rates get lower, inflation comes down. So if that were the case, we're going to see a lot more buyers come in the market, right, Joe?
Yeah. Yes.
So we're going to see a lot more demand. Upside is, sure, you get a lower interest rate. Downside is home prices most likely will go up. And also, it'll be tougher to get seller concessions. But let's take a look at that example. So if we go down 1% from the average market rate today, we're going to estimate that that 585 home price will go up to 620,000 just due to the demand with the lower interest rates from buyers. If that's the case, then we would be at 496,000 for our loan amount, and then the down payment will go up from 117,000 to 124,000, and monthly payment would be 3,176.
Okay. So the increase from 585 to 620 would be, like you mentioned, demand, and that's about a 6% increase in sell price, which, I think that's a fair estimate if rates go down 1%, right?
Yeah, I just, kind of playing with the numbers when working this up, and, we've got a lot of buyers that are waiting for lower interest rates and simple supply and demand. The more buyers we bring back in the market, the higher home prices are going to go.
And there are buyers right now that they want to buy, but maybe they just don't qualify. But you bring the interest rate down 1%, and now they're qualified, right? So sometimes it's like they want to wait, sometimes they have to wait, right?
Yeah, absolutely. You're right. Anytime rates go up, affordability is impacted, and what you can get pre-approved for would drop as well, just due to simple debt to income ratios.
So let's look at what happens if rates go up 1%.
Yeah, so let's say, that inflation doesn't get under control. Government continues to spend, and we see interest rates go up 1% from where we're at today. So in this case, we're going to have less buyers in the market just because affordability and the higher interest rates puts people on the sideline when they're buying a house a lot of times. So in this case, we're going to see, we'll just say home price drops from 585 to 550,000. Your loan amount with 20% down will be 440,000, and the down payment goes down to 110,000. Monthly payment would go up to 3,422. So it's interesting, when I was working on this, not only do we need to look at what the monthly payments are, but also down payment amounts and how they can change based on market conditions.
Sure. And I mean, in these examples, you're doing 20% down, but certainly you don't have to do 20%. You can do less. Obviously, you could do more, but just to keep the monthly payment, principal and interest consistent, right? You can see that if you wait and rates go down, right, the home price is going to be higher. So your payment would be lower than the current rates, right?
Yeah. So if we see it go down 1%, I think the thing you have to look at is, okay, we went up from 117,000 for the down payment to 124,000. Sure, your payment's going from 3,312 down to 3,176. But when taking a look at these numbers, it's really the payment does change some, but bigger thing for some people might be more of a down payment needed.
Down payment, yeah.
How that changes. So it's really it depends on your situation, right? If you're focused on that mortgage payment, right, you want the lowest interest rate possible, but maybe it's where you're more concerned with the cash for closing, how much cash you need for down payment and closing cost. So those are the two things to weigh when you're thinking about buying a house.
Well, you can also make the argument. You can say, well, if 117 is all the money I have for down payment, I don't want to have to spend what is it, 7,000 more or 7,000 more. You could do 117 instead of 124, but then your payment's going to be higher because you're doing less down payment, right?
Well, so the down payment is just a fluctuation of the home price.
Right, but let's say if you did 117, that would be less than 20%. If rates will go down 1%, right?
Yeah, exactly. So if let's say I'm looking at the same house and with the current rates, 585,000 purchase price for 20% down, I need 117.
Right.
Now, let's say if I've got 117,000 saved up for my down payment, and let's say in 6 months rates go down 1%. Well, to get that 20% down, now I need 124,000. Sure, I get the lower interest rate, but I'm paying more for that house. And you can never renegotiate the purchase price, right, Joe? But we can renegotiate interest rates.
Right.
So that's where I think, if we see rates go up even more, not to let it scare you out of the market, knowing that, okay, if interest rates go up more, we're probably going to see home prices go down some, which then lowers the monthly or lowers the down payment.
Sure. So
maybe we use that extra 117,000 that we have saved up to buy down the interest rate, and then that payment difference, we've got 3,422 if we go up 1%. And with that, if it goes up 1% and we buy a house, I do feel we're going to be lower interest rates at some point. We can't predict when, but you can refinance that mortgage down the road, and if you're at 6.25%, you're going to see huge savings there.
Right. And what's the expression that we're hearing more often now? You buy the house and then you can refinance, in the future.
Yeah, and I think we see on social media or marketing all the time right now, buy the house and then refinance. The reality, I always like to be upfront and honest with all clients and do what's in their best interest.
Absolutely.
And, if somebody's really pushing their budget with the expectation of refinancing, you can be put in a bad spot down the road. We don't know what's going to go on with interest rates. We can guess, but I think the main thing as a buyer to focus on is payment. Is that payment affordable with the house you want at the 8%? If it is, it's right time for you guys, go ahead and get that house. And if rates go down, that's a bonus on top that you can refinance down the road. But I always like to set expectations that we have no idea when rates are going to go down.
Right. And I mean, if rates keep going up, then, you got a great rate. But like what you're saying is very important. You have to make sure that you can, that you're comfortable with that payment. Otherwise, you could either, be house poor, or you could be foreclosed on, or obviously, if you lost your job, which, that could happen with no matter what interest rate you get in. But the higher the rate, it's going to be harder to come back from if you lose your job. But so that's why I think it's important to kind of look at the overall picture. And if rates go down, that's awesome. You refinance. But it's good to have a good expectation of we can't control it. We can't time things. is there a higher chance that rates will go down in the next like 5 years versus significantly going up? I think so, but I don't know. I can't bet on that either. No one knows, right?
Oh, I mean, it's all lenders, mortgage experts, thought we were going to be in the sixes this time, 6 to 12 months ago. And one thing, I've worked in the mortgage business for, gosh, 17, 18 years now. And, one thing I learned this year is we just can't predict what's going to go on. We can talk through the numbers of, hey, here's what goes on if rates go up or down. But biggest thing is don't try to time the market. If it's the right time for you and your family to buy, you're in a good spot financially, you're comfortable with the payment, that's the best time to buy a house.
Absolutely. What I will say on the real estate side of things right now, here in Rochester, you can definitely negotiate more on the sale price. So I was looking at the statistics for the month of October, and the percentage of original home price was at 98.6, where it's been at 100% since like January. So that means
Okay.
if a house, listed for 100,000 in October, is sold for 98,600. So you can see that there's been like a little bit more negotiating, and a little bit, sellers are more willing to negotiate on price. But that could also mean, getting more seller concessions for the buyer's closing costs. I've been seeing like, you're getting the ability to do a home inspection. So these are all other benefits that are hard to tie to the, these numbers per se. And like, if you do a home inspection, you'll get a better idea, understanding of the condition of the house and future maintenance, right? So the maintenance is like the other thing that will make homes, affordable or not as affordable. So if let's say you bought a brand new home, you're going to pay for that. Price per square foot, it's more expensive basically to buy a newer home. Price per square foot is higher. But if you bought a previously owned home that's well maintained or that's been updated, and you don't have to worry as much on like maintenance, that's another important thing to consider, right?
Absolutely.
So, and then median sale price, I was expecting the median sale price for October to go down, but it actually went up. It went from 310,000 to 327,000. We'll see what happens in November. Usually, October, November, December, the median sale price goes down. And then, January, February kind of stays stable. And then March, April, May, then you start seeing it go up. We'll see what happens this spring, right, Ryan? I mean, we don't know. Usually spring market's very solid here in Rochester, but we'll just have to keep an eye on the interest rates. And if you want to know what's going on in the market as well, make sure that you subscribe to this channel. And Ryan and I always make videos on what's happening with interest rates and the market. So make sure that you subscribe. Any other tips or advice, Ryan, for people thinking about buying now or maybe waiting, besides what we talked about?
Yeah, I think the biggest thing is to meet with professionals, right? There's a lot of noise out there when it comes to the media right now around housing. And, we'll give honest feedback of, looking at, is somebody ready financially? Is credit in a good spot? Does it make sense for them and their family? So it's really, even if you're, a year out, talking to a real estate professional and mortgage lender is key right now.
I will also add to that, there's also a lot of down payment assistance available. And due to the lack of affordability that we've been seeing the last several years, I know local nonprofits that will be getting even more funding and more money for down payment assistance, because that's going to help a lot of people looking to get into home ownership. So that's another thing to keep in mind, right? You don't have to do the 20. You don't have to do the 20% either, right?
Yeah. So we, myself, I work with Down Payment Assistance, Minnesota Housing, other grant and down payment programs, and there's a lot of incentives right now for first-time home buyers. And interesting thing, way more about real estate than I do. I try to stay on the mortgage side, but I was just looking at properties around yesterday, and it's interesting how there's those homes that are like 225, 250. A lot more of them are popping up around here than we've seen over the last 6 to 12 months. So great to see that, where first-time home buyers can get in at entry-level home.
Absolutely. Yeah. So if you have questions about down payment assistance or Minnesota Housing, which is another great program that you can get assistance from, let Ryan or myself know. And thank you so much for watching.